Hi guys. Right, I just wanted to start off by I know we've got a session tomorrow, but it'll probably most likely be a quick one, judging by the number of emails I've been getting. Today I will go through all the currency pairs after I go through the four emails that I've got. But the big thing for next week is this one here. Not only that, the FOMC. But it's also quite a big week with now the Greeks coming back into the picture again, um, with an election on the 17th of December. But obviously, well, not obviously, but the Greeks, the way they operate, it could be weeks before they find out who's going to win that election. And you've also got the Japanese election this weekend on the 14th, but it's expected Abe is not only going to win but romp it in. So some big stuff coming out soon. This is just a statement from the 2 weeks ago, the BOJ meeting, but you also got the bank votes. That's about it, but the big one is the FOMC. So just keep an eye on that for next week. Right. This week there's not much at all. I think we've got some retail sales in the US, and that's about it. Retail sales in the US. Unemployment data in the Aussie tomorrow. It might give a bit of volatility, but it should be fine. CPI today in China. If you're interested in the Kiwi, which I've given up interest in, they've got the RBNZ tomorrow morning as well. Okay. Right. So just looking at what I've got on, trying to get this. Let's start with the CAD. I've got the daily one here. This stop here is now for this entry, having had two buying orders. You might have seen that earlier in the week. So I'm risk free. I'm also now trying to. We've got this nice little cycle on the 4 hour. I'm trying to obtain an entry on the 4 hour cyclicity, which is how we scale into the trade. We can see it's come back to test the 61.8, these highs over here, and has bounced off that. We got a lot of buying in the test bar. We've got also it's inside bullish bar, and we're looking to go in above that area there, and get the sentiment carrying on. Do have a target now on both of them. The target's the same for both trades, which is up here at 16. On the 4 hour trade, that's a risk 2.5 times my risk, and on the daily trade, it's I think it's about 3 times the risk. Okay, so that's what we're looking on the 4 hour on the CAD. On the yen, similar concept is that let me just go back to the CAD. The reason why I like the CAD is because the daily's still got plenty of room to go on the upside. Yeah. We're looking at momentum. We've only just surpassed the high. If we do a Fibonacci on this here, we can see that our target is in the extension zone. So we haven't even got anywhere near the extension zone. If I come to the 4 hour and I draw extensions on this one as well, you can see the targets at the 2 for the 4 hour extension. Okay, so plenty of room to go on the daily. If we come to something like the euro, which is also showing a nice little high test ring high, or the Aussie or the pound, their dailies are pretty much in the middle, which is okay, but you're not getting the clean cyclicity as you are in the others. This is all a bit messy. Yeah, this is a bit messy as well. This one is clean, but the daily, way overdone. Alright, so how much further can the 4 hour really push? So I'm not so sure about that one. Similar with the Kiwi. So coming back to the yen, you've got this, the daily's seriously dropped off here, and if you like running off the 20 EMA, nice tag of the 20 EMA on the daily. Yeah. So we've got a lot of worked off a lot of the sentiment, and we're going with the long-term trend of this. So we look at the 4-hour. It's come back and tested these highs here and closed above it. And there was talk about the 1950 is a key level. This closed above it. We're working to get in there. If this 4-hour bar closes similar to this as a seller bar, then I'll cancel the order. Okay. Again, this is 2 times the risk as my target. Risking 100 pips, which was a ATR style entry. Momentum's down on the already oversold, so you'd expect this to have a cleaner run to our target than if it was up here or way up here as well. So that's the opportunity there. We're just leaving that, though obviously there's a couple of hours left of this to go, an hour and a half. Yeah, at 0400 when the MetaTrader gets to 0400, this bar will be finished, and if it's not a buyer bar, then it's going to be cancelled. Okay, that's pretty much all I'm looking at today, but we will go through the charts. So let's come to this first email. The first thing I noticed when I opened this up was you don't have horizontal. You've got your moving average support, you've got your price action, you've got higher highs and higher lows. Yeah, can't see where your fib started, but judging by the 618, I would suggest somewhere around here. And you're looking for an entry in here, which is all well and good, but what I don't see is a horizontal, and that's a must-have. Okay, got to be trading off a horizontal. So the question was in your email was, did you panic out of it on a Friday? Well, I would say no. Even if you put a horizontal by saying it's that previous high, that's acceptable, but you didn't have it on your thing. So you got in here, which was great entry. You're risking 90 pips. And you made money on the trade as you suggested, but the question was, what should have been my profit taking point for this trade? Well, 180, having risked 90, 180 would have been good, or 360. Obviously on Friday you would have got 180 pips, but no one was to know that the non-farm payrolls was going to be so bullish. They were expecting 290 and they got something like 360. You couldn't have expected that, and I believe that you did the right thing by getting out of the trade. The only other thing you could have done prior to non-farm payrolls is move your stop up according to the rules, which means your stop would be underneath this bar here, 2 consecutive buyer bars, or underneath this being a high test bar, and then close out of part of your trade. So you lock some of the profit in, leave the target in for the rest of the trade. So if you'd had, let's call half. If you had a 1 lot, you'd sell 0.5 and then leave 0.5 at your target up here at 180 pips, and the stop of that is there. So you would have locked some profit in and got some target, and that's the only other sort of approach that I think is sort of a sensible way to dealing with it. The fact that you got out before non-farm payrolls, I think is okay. You made a small profit. Okay. So how do I protect myself against important news items? Well, is realise that they're coming out. You could, whether you take a trade such as we've got FOMC next Thursday. If you take a day trade now, will that be finished by next Thursday? Maybe, maybe not. It's being aware of it and then having a clear approach to it, and this is why I suggest right at the start of your career is have a trading plan and saying, well, this is when this happens, I'm going to do this. Yeah. So when you're not under pressure whilst you're in the trade, such as we were on Friday night, when you're under pressure like that, you tend to sort of start second guessing and making some curious trading decisions. But if when you're sitting here now with no trades on and you don't have that pressure of what's going to happen, then you can make a clear decision. You go, right, well, if I'm in a trade and there's a tier one news item, tier one being a central bank, this is going to be my action. You know, if I'm in the money, if I'm out of the money, all these different variables, and you have a clear course of approach, so that when these things happen, you can go to your rules and say, well, this is how I'm supposed to act in this time, and you don't break that. Right? You stick to that. I think that's probably the best approach as you're starting to learn how to trade. Okay. I know you're online there, Champ. Does that make sense? And just make sure you got a horizontal to trade from, because I can't really see it in there. Okay. Okay. Come on, Georgia market. Some humour to cheer us along. Okay. I'll try and make it entertaining. More action on the knock. I did take some profits, stop losses, break even. I've put a new pending order on the 1 hour chart now. Well, last part did make a lot. I've noticed this whipsaw price action. Yeah, it can get pretty whippy. Oil price, right? Oil is oil had a bit of a bounce yesterday. But it's sort of fart-arsing about. Gold's obviously had a pretty good run, and copper is starting to come back again as well. So the commodities, this slide that oil's had, I think there's still more in it. Even though we've got divergence here, you might get a little pullback, say the 20 or something, before this continues. These guys are not going to stop producing it. They're squeezing all the little players out of the market. Saudi Arabia, it costs Saudi Arabia about $5.50 a barrel to pull out of the ground, whereas it costs the Americans a hell of a lot more, and the Russians and Iranians, they're closer to sort of $25, $30 a barrel. And so Saudi Arabia, which is a good 1/3 of the oil industry, at $5.50 a barrel, they can afford to drop it, drop the price down to easily down to $30 or $20 and squeeze the others out of the industry. And I think that's what's happening. No worries, Badima. So on that, I think oil might have a little natural bounce, but I'd expect oil to get to $50 or $40 at some time soon. Okay. The Americans are self-reliant on oil at this stage as well, so it's not so necessary for them to rely on Saudi Arabia. The other things you're looking in lower time frames is euro dollar short off the 20. I presume you sent this to me yesterday, so I presume that one there, yeah, that might have faked you into it. But you've got to have a horizontal to go off, right? I suppose you might have been going off this horizontal here. Yeah, not that crash hot. And you've also got to have a trend in the daily. And whilst this is a trend, it's this 124 level, which is pretty big when you look at it. Markets hasn't really run away from it when you consider the trends like the Aussie and the yen. Okay, so looking at that on the 20, I think is a weak entry. 4 hour pounds short off the 50. Yeah, I was looking at this morning at the same time as I'm looking at these other ones. And however, the difference being is that, again, like the euro, this has been at 156 for freaking about a month. That's really got away from 157. Really, it hasn't gone too far from it. So I think that when you're trading the shorter time frames, you've got to trade the cyclicity on that time frame when the market's trending strongly or relatively strongly. And this is not trending relatively strongly. This is just fart-assing about, really. So whilst it might look good, you know, that high test bar there, or even this one here, it's not really testing a horizontal that we can identify, and it's just more of a mess than anything, really. So I'd rather leave those two alone. Dollar yen and dollar sec. Yeah, well, dollar yen I'm looking at, as you can see. Dollar sec, I presume, is probably similar. Okay. Alright. New trade on the platinum. Come on, wake up. New trade on the platinum. Before I go to that one, Bob's got a question on what is the best way to check if the spread on a pair is excessive on the hourly time frame. Present, I won't take any pair over 3 pips, but maybe a percentage of the daily range would be a better solution. Yeah, look, if you go to, I believe it's, go to AxiTrader's website. Once that's loading up, if you come in here, I'm just trying to remember if they put it in here. Symbols. And that spread they don't put in there. They do have it on in here somewhere. They have what their spreads are, spreads, rates, and rollovers. Yeah. Now, to answer your question, I think at present I won't take any pair with over 3 pips on the hourly. I think that's a smart thing. You know, you've got to look at what the average range is on the hourly time frame. Okay, so if you say, let's look at the Aussie, and we put ATR on it. And so the ATR is currently 13 pips in an hour, right? So if you're trading a phase 1 on the hourly, how many pips do you normally get? If you're looking at that, 124. But also, having something that's 8 pips, I wouldn't do. Personally, I won't trade the hourly outside of these majors, these 4. Right? I'll only trade the hourly on these 4 here. I won't even trade them hourly on these 2 here. They're just too difficult. The 4 hour I'll trade on any of these 6 mixed with each other. Yeah, so the euro yen, the pound yen, the pound kiwi, the pound Aussie, the pound CAD. I'll trade those on the 4 hour. And then going out to the exotics, all these bloody weird and wonderful things down here, like the Russian ruble and shit, I'm not going to trade on intraday, full stop. I know some people, such as Mark, is having a wonderful time on the knock on the 4 hour, but to me it's just not worth my time. So I'll trade the daily and only then rarely. But to answer your question, what's the best way to check if the spread on the pair is excessive? Is look at the what the ATR is, which is on the hourly is 13, and if the spread is more than say 30% or 40% of that, then I'd walk away from it. Does that make sense? So if the spread is 3 pips. What's this? The spread is, let's call that 1.5. Let's call it 2 to round it up. That's 20. It's about 18% of 13. So that's okay. Once you start getting to 30 or 40% of the ATR, I think you're going to be struggling. Not struggling. It's just it's an expensive operation when you start trading on the hourly. Okay. Right, so we'll come now, brings me to the Kiwi CAD Heat's got a question on that. Okay. Again, if you're not going to literally draw the horizontal resistance on the page, at least write the price so we can have a look at it. And also bearish chart pattern. What is the chart pattern that you notice? Okay. Is it this wedge and the breakout of the wedge? And that's what you're trading. That's fine. I don't mind, but just let me know what chart pattern it is, because quite literally you could say, well, that's phase 1, phase 2. I'm not sure exactly. This is a. I mean, looking at that, you've got it's a pennant. There's your flagpole on ascending triangle. Well, it's almost asymmetrical triangle, isn't it? So, mind you, looking at these things and trading them, I don't have a problem with that. But I just want you to identify more clearly what you're looking at. And so, horizontal resistance, I'd like you to mention that. Either mention it in price or at least identify it on the chart with a horizontal line. And bearish chart pattern. What is the chart pattern you're trading? So 8-7 target 91. I think it came back a bit. Where does it stop? 88, 83. So close to 89. Up here. Interesting as to why it stops there. Unless it's above this horizontal that you've identified. It's underneath that. This is the horizontal you might have identified as the resistance. It must be some sort of ATR stop. Okay. Looks like it's coming back to retest that after breaking out. Okay. Well, as I said, you can trade those. I don't mind. I don't trade chart patterns. I just trade off horizontals. No worries, Bob. I know I sort of went round and round the question, but hopefully I got there well enough for you. Okay. So let's go to the CAD. Let's get into the crosses. We'll just go through all the charts quickly for you and see what's out there. There's a couple on the Aussie that I noticed. Sort of went through the Aussie pairs this morning. Pound Aussie, there's no divergence, but it's up against this nice round number of $1.90, which we can see was resistance over here. Well overdone, but there's no divergence, so you're not getting into that just yet. Euro Aussie, $1.50 is very key level. That was the head and shoulder pattern that was broken some back here. And see left shoulder, head, right shoulder. Also some highs here and highs here. Big level of $1.50. It's overbought up here. I'd like to actually tag it. Maybe it'll do that today. But it should give you an opportunity to short it. Whether or not you take that is another thing. But I'll be looking for buying time to come. Aussie Sing is showing divergence. My historical data doesn't go back far enough to show me if there's a horizontal level here. But we are getting divergence, and if you put your extensions on, we're in the zone. So if there's a horizontal around there somewhere, then there may be an opportunity there. Obviously, the most important thing we need to see is buying, and there's not that there. This thing, well, not really going anywhere, is it? Still on that trend line, but there's no horizontal for it to be up against. I dare say that it'll probably come down to this horizontal here. Now that we're back up into the 30s, we might sort of see another push lower. It's hard to tell at this stage. Stay away. This one I like. As you can see, we've got the Fibonacci 50 going from the first close above the 50 EMA. We've got a horizontal support line which it's flirting with. We've got an inside bar at this stage. So Thursday bar, if that's a buying bar, then there may be a trade for Friday. So this is what I mean by opening up the chart and seeing what's happening. We've got a good cycle above the over the EMA. It's not ready to trade today, but it's trading in a couple of days' time. So what I normally would do is come to my trading page and add it to that, and keep an eye on it. Yep. So now it's on my trading page. Like that one. So that's, as I said, a couple of days away. Aussie Swiss, similar to the Euro Aussie, it's getting down there. 80 cents being the support level. It's oversold, but there's no divergence, so not interested. This one we do have divergence. We do have a reasonably strong horizontal. Maybe not as strong as I'd like. It's only a soft horizontal. Well, yeah, because there's the strong horizontal down there. Or you're coming up here. If you come up there, you get a few more sort of, it's a little cleaner, isn't it? But we're at the 1.618 as well. I think I had it down there at because it was 90. It was a nice round number of 94.50. Yeah. You're in the extensions. You got your divergence, but again, no sign of buying. So that's, I'm not going to trade phase 2 this month, but there is a potential phase 2 trade there in a couple of days' time if we get the buying. Okay. And Aussie dollar, leaving it alone. It's overdone. Clear doji bar. Uncommitted. A bit of news around this as well, so staying out of that. Not looking for short trades, and am looking for short trades, but I prefer to be trading it from a point of strength, which is off a horizontal somewhere. There's a few and far of those between around here. Until you're back to 85, is there really any sort of major resistance to trade from? So if we can get it back up into the 85 area, that's when I'd look to get short. It's way overdone. I'm certainly not going to buy against this sentiment. Not with the way Abbott's going. The best opportunity to do something decent with the country, and he's totally stuffed it. Right. Again, see, I don't really trade out here, but you've got a cycle. Would you sell the pound over the Turkish lira? I wouldn't. Another way to look at this is that, perhaps you're in a range. With the 50 and the 200 almost flatlined here. Perhaps you are in a range, but momentum's looking a little overcooked. You're up against a horizontal resistance through there. Not a strong one. You don't need strong to go with the trend, but I just couldn't bring myself to sell the pound. Not against a weaker currency such as the lira. That's just going nowhere. No interest. This one's had a great run. We did take this. Took this in the Bali boot camp. Off this ring low here. She tootled on up. And as oil price weakened, what we get, no divergence yet. That's still higher highs, but there's don't have the data to tell us if there's a horizontal resistance line. But you're certainly in the zone to for selling to begin. Again, just can't bring myself to do that. Either side of the 50. Good luck with that. Similar. It is on resistance, but yeah, prefer to be looking to buy that. This one range bound in the middle, not going anywhere. Just shopping about. Tried to range trade it again. Didn't lose money, got out of break even, but range trading and myself do not mix. Some people might be looking at this as a potential wedge. Yeah. Me personally, I prefer horizontals. Yeah. Really not going anywhere fast, is it? This one, I'd like to see a cycle above the EMA. Come back and test a horizontal, and it's still sort of trying to do that. Interesting. Similar to the dollar yen. Yeah, momentum's worked off a lot of momentum. If you can find a horizontal that it's these highs here, let's go on to test. Potential there. Good potential. I'll come to the yen as well, but in the yen there was it hasn't broken the structure of the uptrend on the 4-hour yet. So this one, everyone was wanting to sell, and I just can't bring myself to sell it. But now it's a bit messy. I need to see a cycle above the EMA before looking at taking that long. I think one guy was looking at it as a range trade and was taking it long. That's fine. Yeah. Support line here, it's a bit of a base, but there's nothing for us to enter there or there. Well, we discussed that. This one may be a phase 2. There's no. Again, it's just messy. I'd prefer to stay out of it rather than get involved in the mess. Euro. All these lines are from monthly. Right, so got monthly here, 128. Let's call it. You got this trend line, and this trend line has broken that. Wedge. Well, loves trend lines, don't they? It's on that one as well. Now we've got trend lines going everywhere. Look at that. So which bloody way is it going? Well, take all that crap off. Which way is it going? It's going short, and we've got some divergence, but again, you've got to go with the sentiment of the market, right? That clear sentiment. Until you see that change, and I would suggest a change in that sentiment would be through these highs here. Yeah. Until you see that change, I mean, it might be around here as a potential break of that downtrend. But until you see a change, every time it comes to look for an opportunity to short, you should be taking that, because that's the clear sentiment. So in this instance, I'd be waiting for it to come into the 125 area, if it can get back above 124, and look for it to get short there. Euros we've discussed. Euro CAD, it's also really since Sep, it hasn't gone too far from 141, has it? Yeah. Looking at it, you got lower highs almost. You haven't got lower lows. It's just rather crappy and difficult to deal with. And so I'd rather sort of just ignore it. Euro pound code, Euro yen. Well, you've got divergence if you want to short this, but where's the support level for this? Crows are a little annoying today. Yeah, that's where the support is, and you'd be looking for buying opportunity off that somewhere. Similar to all the other yen crosses though. Yeah, that's momentum's down in the 50s again, so that's alright. You may look at an opportunity on the 4 hour if there's a decent horizontal to trade from. Yeah, not as nice as what the dollar yen looks like that. Messy as. Need to see a cycle above the EMA. I'm not seeing that yet. It's still going. Oil prices really hammering the poor Norwegians. Well, they're not poor, they're bloody rich, but unfortunate Norwegians. You've got divergence there, but no real clear sign of selling just yet. So, yeah, stay out of that. These things, I don't know why you would want to look at it. This one though, there was nice cyclicity. Then the rand came out and shut itself. So now have broken this downtrend. Yeah, because every time we had a high, if you look at this, every time we had a high, right? High. Whoop. Was that high there? Did it get breached? No. Highs, 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 highs. Each one is lower than the previous one. And now we've got this, which has broken that. So if we then get a swing low here, we're now getting higher highs and higher lows. So this downtrend is now, that's the first warning bell that this downtrend is over. It may re-engage in a new downtrend, that's fine. But at this stage, that is a warning bell that the downtrend's over. Crap, wouldn't touch it. And very similar to the euro dollar itself. Okay, Swiss sec. I don't like bars like this, it just makes life really difficult to manage and hard, so don't like it. This one on the other hand, try to trade it here, got taken out, then didn't revenge trade it, although I should have by the look of it. Yeah, certainly in the zone, you have the divergence. And if oil price, I've discussed oil price with you, if it does bounce, then this may bounce with it. And the CAD may fall, which would run the trades that we've got on the CAD. What we need to see though is buying. We've got the arguments for the trade, just need to see the buying intention, and this is engulfing, then weakness is not that. We need to see good strong buying before we'd want to take this as a phase 2 trade. Gives me the shivers, that one. This one we kind of discussed before. Gentleman was looking at it. Personally, I don't trade those chart patterns. I need to see cyclicity and a trend, and I'm not seeing that there. You're getting higher lows, but you are getting lower highs now. You've got a lower low, so I need to see an opportunity to get short maybe, but not just yet. Nothing there. Not enough of a cycle for me to be interested in taking that long. So it's the same with that. That's just rather rubbish to look at. So I won't. I'll go and look at something else. Again, that's rubbish to look at. Having been such a nice little trender. It's just doing this sort of shit. Yeah. So as I was saying, that on the dollar yen, if we look at the 4 hour on this, all right, this low hasn't breached this low, and it hasn't. It's only by a couple of pips. So that low is 85. This low is 93 or something. But this is, it hasn't breached that low either. So literally the uptrend is still intact because we haven't broken the structure of it yet. Okay. And there's now enough room in the daily to get back up there and hit our 2 times my risk target. CAD yen. Well, there was divergence. Some people may have taken that short. I really can't bring myself to buy yen. I did read this article this morning on Bloomberg. Let me see if I can find it. It was all about bloody Elliott waves. Russians battle the recession. Buy a Porsche. Yeah, of course. Yeah, here we go. Market reversal. Anyway, you guys can go and read that. Basically, it was level. Elliott wave. Well, this is the level of Ichimoku. If it closed above, closed underneath that, and it didn't. So, dollar yen. I'm still a buyer. Abe is going to win the election. We can see here it closed. Where did it close? 68. Abe is going to win the election, and I think that's a good thing. So I can't just buy again. Safe haven may ruin this trade, but I don't think there's anything to be scared about really. So I see all of these, this pullback, despite the Greek tragedy, as an opportunity to get in. They're all doing the same thing. If you want to trade phase 2, go for it. There's a lot of them that are giving you that opportunity, such as the CAD yen. But I find it difficult to try and trade against that bearish yen. Why have I done? That's got to come back. Yeah. It's choppy because of oil, so I'd stay away from that. More overdone than most, isn't it? It's actually under the 50 and broken the structure. Interesting. Little Kiwis are a little weak, weaker than the Aussies. Yet the Aussie Kiwi is going nowhere. Broken the structure. First warning bell. Could re-engage in an uptrend, and I suspect it would, but that's a bit of a... It might come back down to this level here before rallying, perhaps. That's the same as the dollar yen. I think trading in these again, it's like trading out here the Thai baht. Why would you, unless you're going to Thailand? Would you trade the Thai baht? Romania, Thailand, Hong Kong. Good luck with that. Krona. Like this US dollar bull run, and I'll show you the dollar index, is what's driving it. And that's far from over. The dollar index has had a bit of a pullback, but I mean, look at that, and then look at this. Very similar charts, aren't they? Danish krona, yep. Danish krona, dollar index, Danish krona, dollar index. So this dollar index run is what's driving everything. But things, yeah, so this is not anything about the Danish krona, it's all about the US dollar, but it makes it difficult to trade when you get these kind of golfing bars and radical movements. That's what I would rather stay away from. This is starting to look range bound. It's the same as the krona, similar. This one here is obviously the Russian sanctions and oil prices nailing this to the wall, but certainly not going to sell that. Again, tough to trade. And also, here's another oil price one. There's divergence here. There may be a phase 2 trade on that. You need to check the historical. You want a strong horizontal for that to be reacting to it, but the little bounce in oil, I don't see it as holding for very long, but this oil price is looking a little bit weaker today. It's still going, I think, down to 50, if not 40. Peso, yeah, well, I'm not sure why it's so weak, but certainly, 96. China, they had some shocking numbers earlier in the week, and well, not shocking, just below normal. So they got a bit weaker. The South Africans have had shocking numbers. Again, they're all towards the end of phase 1, and makes it difficult to trade. This one we nabbed out. Sun kick up. Looks a little cleaner than the euro, but I think it's also difficult to trade. That one we know about. Kiwi, should be in the low 70s, high 60s, maybe even further south than that. Broken the monthly trend. But yeah, it's down around here somewhere where it should be. It's broken support there too. Yeah. Try to get short this here. Taken out from minor loss, having moved the stop above this bar. Above this high test bar. So it might have even been, I can't remember, it might have been a break even. Again, the 4 hour looks like an opportunity to get in on this trend if you want to trade I've given up trading this crap. Pound discussed, euro discussed, Aussie discussed. So that's it for today, guys. So what I'm looking at is, as you know, this one for potential entry on maybe Friday. So keep an eye on that one. And then these 4-hour ones, which are alright. You could probably look at that 4-hour one too if you wanted to, but I think the daily's pretty much overdone, so I'd be suspect as to how much further it can go. It's not like the Aussie to be oversold for so long. Alright, are you still in the Kiwi trade? I got out. No, the Kiwi trade I got out of. Alright. Can't remember to be honest with you, but I got short underneath this bar, and then I got short again underneath this bar. And then I think it must have been this reversal bar that I moved the stop to above this reversal bar here, and so took a little loss on the second trade and a little win on the first trade. So I think it pretty much was a small loss on the whole situation. It got taken out by this low test, and then threw the towel in the corner, spat the dummy and said, "F you Kiwis, I had enough of you guys." So no, I'm not in it. And obviously when I did get out of it, yeah, of course it ran. That was last week, well before non-farm payrolls. This is, got taken out on the 27th of November. You might have got in on this day here, which is the 1st of December. As I said, tomorrow will be a quick one. And then I won't be doing another webinar until Thursday. As I've got boot camp Monday, Tuesday, back into Sydney. So you can either, I'll chat to you tomorrow anyway. But yeah, that's it. Good stuff for today. Thank you for your time, Ross. You still there? You go on. Alright. We'll send a trade later today, probably dollar yen long, if the next 4 hourly is a buy bar. Oh, well, that's a buy bar right now. But yeah, okay. I'll have a look at it. Alright guys, I appreciate your time, and I shall speak to you soon. Cheers.